The air crackled with anticipation. The White House, a symbol of American power, was abuzz. On March 7, 2025, it played host to an unprecedented event, the first-ever Crypto Summit. This wasn't just another policy discussion, it was a clear signal. President Trump was placing his bets on cryptocurrency, ushering in a new era for American innovation. The summit was more than just symbolic. It marked a decisive break from the cautious, often antagonistic approach of previous administrations. President Trump, never one to shy away from bold moves, declared his ambition unequivocally. America would become the global leader in the cryptocurrency revolution. This was not mere rhetoric. For most of his campaign, after winning the election and on his first day in office, President Trump took the decision to make the United States the bulwark of the crypto world. The message was clear. The summit itself, though brief, was a carefully orchestrated affair. Industry titans, technologists, and policymakers converged at the White House. They were there to discuss the future of cryptocurrency and its role in shaping the American economy. President Trump's vision for American leadership in the crypto space is ambitious. It's centered on two key pillars: fostering innovation and protecting investors. This two-pronged approach aimed to create an environment where the crypto industry could flourish while safeguarding the interests of the American people. The days of regulatory uncertainty and bureaucratic hurdles seem to be ending. President Trump and his collaborator are proposing a series of pro-innovation policies designed to streamline the development and adoption of cryptocurrencies. These policies aim to cut red tape, encourage investment, and position the United States at the forefront of this technological revolution. Investor protection is a cornerstone of President Trump's crypto strategy. The White House recognized that for the crypto market to achieve its full potential, investors needed to feel confident and secure. To that end, the administration unveiled a series of measures designed to enhance transparency, prevent fraud, and protect consumers from market manipulation. The summit was buzzing with a palpable sense of optimism. Industry leaders who had long grappled with regulatory ambiguity and skepticism were energized by the administration's clear commitment to fostering a thriving crypto ecosystem. The message was clear. America was open for business, and the crypto industry was welcome to lead the charge. The most striking announcement of the summit was the establishment of the Strategic Bitcoin Reserve. This bold move, enacted through an executive order just a day before the summit, signaled the administration's recognition of Bitcoin as a strategic asset. The reserve, managed by the U.S. Treasury, would be funded by confiscated Bitcoin, a testament to the government's success in cracking down on illicit activities involving cryptocurrencies. The reserve was not limited to Bitcoin. A U.S. digital asset stockpile was also created to manage the government's holdings of other prominent cryptocurrencies, including Ethereum, Chainlink, Solana, XRP, and Cardano. With an estimated 200,000 bitcoins already in its possession, the U.S. government became a significant player in the crypto market. The implications of this move were far-reaching. The establishment of a strategic Bitcoin reserve not only acknowledged the digital currency's growing importance, but also provided the U.S. with a powerful tool for economic influence on the global stage. It also sent a strong signal to other nations that the U.S. was serious about leading the way in the digital asset space. However, the creation of the reserve was not without its critics. Some questioned the need for such a reserve, arguing that it smacked of government overreach. Others warned of the potential for market manipulation, suggesting that the government could artificially inflate or deflate the price of Bitcoin by buying or selling from its stockpile. The Crypto Summit and the establishment of the Strategic Bitcoin Reserve mark a stark departure from the regulatory approach of previous administrations, particularly that of former President Biden. The Biden administration, while acknowledging the growing significance of cryptocurrencies, had adopted a more cautious stance, focusing primarily on mitigating the risks associated with digital assets. Biden's approach was characterized by a heavy emphasis on regulation and enforcement. His administration had prioritized combating illicit activities involving cryptocurrencies, such as money laundering and ransomware attacks. While these efforts were lauded by some, they were also criticized for stifling innovation and creating uncertainty for businesses operating in the crypto space. In contrast, the Trump administration's approach was decidedly more proactive and, some would argue, more visionary. By embracing the potential of cryptocurrencies and creating a regulatory environment that fostered innovation, President Trump aimed to position the United States as the global leader in this rapidly evolving industry. The summit itself was a testament to this new approach. Industry leaders who had previously expressed frustration with the slow pace of regulatory progress were given a seat at the table. They were invited to share their insights, concerns, and recommendations directly with policymakers, fostering a dialogue that had been sorely lacking in the past. The Crypto Summit, with its emphasis on innovation, investor protection, and the establishment of a strategic Bitcoin reserve, signaled a new era for the cryptocurrency industry in the United States. Whether this bold new approach would ultimately lead to the desired outcomes, American leadership in the crypto space, a thriving digital asset ecosystem, and enhanced economic prosperity remained to be seen. However, one thing was certain: the Trump administration had thrown down the gauntlet, challenging the world to keep pace with America's embrace of the crypto revolution.